Welcome to another episode of Tech Passion Special, where today we'll be exploring the complex and fascinating world of cross-border payments in Africa. As the continent continues to grow and integrate into the global economy, the need for efficient, secure, and reliable payment systems has never been more pressing. But as we all know, making payments across borders can be a daunting task. From navigating complex regulatory environments to ensuring the security and integrity of transactions, there are numerous challenges that must be overcome. And that's why I and our guests will be considering the question that you most likely ask: what does trust mean to you when it comes to sending or receiving money across borders? I am Gabriella Michael, your host. Take a short break with me, and I'll be right back. So joining me on the show today is Favour Aroghene Ndulu, a renowned expert in the field of payments and fintech, with a deep understanding of the opportunities and the challenges facing the industry. And of course, I must add, she's also the co-author of the brilliant report, Emerging Trends in Cross-Border Payments. It's great to have you on the show, Mary.
Hi, it's great to have you. Nice to be here.
Great. How are you doing today? It's great. Thank you
Um,
for honoring
it's
the
been
invitation.
a busy week, but yeah, I'm good.
What was it like starting this particular research, and how has it been for you? Looking at the attraction that it has obviously gained so far.
Yeah, interesting thing. I first of all, I didn't think it would go this far. I didn't think it would be this big. Um, it was just me trying to get information on cross-border payments, doing a lot of research, but finding out that I was seeing the same thing over and over again. It just felt like we're all regurgitating the same facts. Everybody was just using like data from maybe World Bank, McKinsey. It just felt like the same. But what I really wanted to know was, what does it take to really scale cross-border payments in Africa? You know, and then I thought maybe I should speak to the people who are trying to do this, who are the founders, who are the market players, who are these people who are active in this space. Maybe I can get from their experience, because no true experience is the same. So that was really how we started. I reached out to a couple of colleagues and contacts and told them, I want to do this. What do you guys think? So I drafted out a couple of questions, reached out to them. They provided their answers, and of course we had to back the answers with proper research. And really, that's how it was born. Today is a big deal. I didn't think it was going to be this big of a deal, really.
And that's simply amazing. All right, let's dive straight into what we're talking about today. But we'll start with navigating the regulatory maze. By the way, congratulations on your new feat. I heard you actually moved to a bigger position, so congratulations for that.
Yeah,
All right, so let's talk about why we're here. Okay, you mentioned something about the McKinsey report. Now, according to that particular report on Africa's evolving fintech industry, the African continent looks set to realize around $230 billion in financial sector revenue by 2025, which is actually the year we're in right now. And the report actually further revealed that the only factor that could prevent the continent from realizing this goal is its ability to reach the continent's 1.4 billion strong population. And of course, it also noted that one of the barriers that stands in the way of actually achieving that feat is the problem of fragmented regulation. Now, that is obviously one concern and one issue that you obviously stated in your report. Can you explain to our viewers, though, how this issue affects the fintech organizations involved in this, and of course the customers too?
Yeah. So in Africa there are 54 countries, 42 currencies. Unlike Europe, we don't have euro. We don't have this common means of payment. Right now, I think the last report that was released by World Bank is that the trade between African countries is about like 2% of global trade, right? So a country of 54 countries we're only trading 2% when you compare it to the global trade. And then when you compare it to the number of people in Africa, that is beyond 4, right? We're not doing enough as a continent to really compete globally. If you also look at, what is our GDP? Our GDP in Africa is about 2%. The GDP of India is about 10%, right? The GDP of China is about 19%. So 54 countries, 2%, 1 country, 10%. It is poor. And one of the reasons for that is we've not found a way to leverage our numbers, our resources, our people, our value. Africa is a very rich continent. We have the manpower, we have the resources, we have the mind, we also have the innovation, right? But what is missing is that real connection between countries. We need a currency, right? We need something like euro. We need a payments gateway like SEPA. People need to be able to send money from Nigeria to Egypt, and then you get the confirmation in seconds, the way NIBs have done for Nigeria, right? We need to establish all of those connections. And I think that is what is missing. Until we fix that, we're really not going to be able to compete with the world globally. It's almost like the entire continent is fighting for 2%. Even if you're in Nigeria and you're building your business and you're scaling, it is 2% you're fighting for. If you're in Egypt and you're scaling, you're fighting for 2%. So we need to bridge that. Our policies need to be singular. Our AML policies need to be singular. Our currency needs to be singular. Our leaders need to work together to ensure that they bridge the gap that exists. Because we do have the products to trade intra-Africanly. We just need to find the way to ensure that.
Okay, now talking about solutions here and policies that efforts. Now, this is something I believe a lot of experts have actually been pushing for in the financial sector. They've been advocating for it for years, but it looks as if we're yet to hit the nail on the head. Now, if I actually remember back in, say, 2023, we had the deputy CEO of Africa Nenda, that's Sabine Mensah, back in Ghana, as she actually called for financial sector regulators in Africa to begin to move towards harmonizing regulations. And one of the beautiful things she also said there was that this was actually a way to actually set the tune to make AFCFTA even more meaningful. Now, which brings me to the goal, to the main aim of the AFCFTA, which is actually to ensure that trade policies and regulations across Africa are obviously harmonized. So what could be the stumbling block here in making this a reality in the payment sector too?
I think politics is, and honestly, I wouldn't want to dive into that, but I think politics would be, because right now AFCTA has launched PAPs, but if you go on the PAPs website, not every bank are on it, not every country is on it. Even the process is still not as seamless as it should be. If you want to make a payment through PAPs right now, you have to send the money to your bank. The bank have to confirm the money. They have to then work with another bank in another African country. The process still takes about 3 to 5 days, right? That's not really a solution, because that is exactly what the problem is right now. We need to get payments beyond days to hours, and possibly even seconds, right? So I think policies are going to be like the biggest challenges. Currency is also like the main challenge. We don't need a situation where I have to convert my naira to ZOS or SAF. We need a currency that, just like euro, it's comparable to our local currencies and it is available for all. So liquidity is also a challenge. We need to be able to access this currency and use this currency for trade in a platform that connects all banks, all countries, and everybody knows about it. I don't have to go to a website to transact. I want to use my mobile device. Mobile device penetration is increasing in Africa. You have 90% of people using their mobile for services that are on the internet as against desktop, right? So aside from that, illiteracy is also a problem. How many people even know of this AFCTA that we're talking about? How many people know what it can do? What really has been done to invest into the education or awareness of this product or feature? So it is still the 1% of us who are using existing solutions that this solution has been built for. So it doesn't really aid the financial inclusion that it was advertised to aid.
Okay.
So what I see is if there is no currency, if there is no proper infrastructure, if there is poverty, is also always going to be a problem. Beyond payments, we need to solve our economic, policies or lines or limits. If people remain poor, nobody really cares about wanting to trade globally. They're trying to feed, they're trying to get shelter. So each of these governments need to ensure that within their country, a lot is done to ensure that people go into the social quarter that can actually live and use these solutions. And then
Yes.
infrastructure needs to be provided to ensure that the solutions work the way they are supposed to.
Do you think also this policies actually stand as a hindrance for the likes of the International Monetary Fund, IMF too?
I think they do, because at the end of the day, the IMF is looking for an economy that is transparent and secure. If they do not trust what we are providing, we're not going to have that access into the global trade, right?
Okay.
Or our access is going to be reduced. So if we do not sort out what is happening in our continent, we're also reducing our ability to play globally.
Oh, that's brilliant. So let's talk about one of the things you also noted there, which is the aspect of private and public partnership. Now, we've actually seen partnerships between the Nigerian government and fintech companies like the likes of InterSwitch and I think PayStack too. And that's obviously a great example when it comes to collaboration in tackling all these regulatory challenges that we're obviously facing in Africa. But how can these partnerships be scaled up in Africa? Because we've seen it in some companies, but obviously it could be better. How can we actually make it better?
Yeah, I think most countries are doing a little better now. South Africa is doing a lot more. I mean, they have a couple of regulations for financial services, even stable coins. The first real law on blockchain is going to be released by South Africa shortly. So South Africa is doing a lot. Rwanda is taking a very proactive approach to partnerships. Kenya as well is doing that. Tanzania literally created a fintech policy that allows even companies that are not in the country to expand easily into the
Okay.
country. So I'd say a couple of this of a couple of countries are already taking this initiative. What the others need to do is really just replicate what is happening, because if you look at the African GDP, 70% of it is contributed by financial services. You know, so if 70% of our African GDP is by financial services, then you literally have to ensure that the financial services in your country is growing, right? It's
Yes.
just really low hanging fruit. So increase your GDP, make it easier for people to do business, make it easier for people to generate revenue, and then partner with them in different ways. Either is through partnership with the central banks or through policies or through infrastructure. I know that the Nigerian government is trying to ensure that they build um, a gateway for internet penetration to increase, so broadband penetration is trying to increase. So if you do that in your country, there is better internet. Of course, there will be better financial services because a lot of these financial services are digital. They need internet to work. So I think it's low hanging fruit, but I also think that we have to commend what has already been happening in a couple of these countries. And I
Yeah.
think that it is happening and more is going to happen really.
Okay. So now let's put the customers up in front. There's a particular saying that goes, the customers always comes first. But it looks as if we started talking about the challenges for the fintech and we're putting the customers as second priority. But then obviously they're still priority. Now, if there's anything that customers always expect is the aspect of speed. And obviously there's where trust also comes into play. So companies like PayPal, and I think I must say M-Pesa too, have set high standards for speed and convenience, which brings me to ask, what technologies or even practices can payments providers use to ensure trust while also maintaining speed and security?
Yeah, that's a brilliant question. So as a customer, what really matters to me when it comes to money is that my money is safe. I can access it whenever I want to. I can withdraw it if I want to tomorrow, and that's kind of like what worked for the traditional banks. They built a whole lot of legacy and trust. People know that if something happens to my money, I can just walk into the bank. When you now take that into digital financial services, which we're kind of like addressing in terms of cross-border payments, the lack of trust is you don't have a physical presence. How do I know that, I can access my money whenever, and that's a big deal. So we've seen a couple of brands who have done that. Like you mentioned, PayPal and M-Pesa. But beyond that, we've seen brands like Kuda, we've seen brands like Pampay, we've seen brands like Mint. We just raised one in South Africa. So it's a lot of work. It's a long-term project. However, you just need to ensure that people's money is safe. Cybersecurity has cost Africa as a whole lot of money. I think about 40 billion, 10% of our GDP. So a whole lot of investment needs to go into cybersecurity. Either we are creating talents who can solve this issue. So even in our education, we need to ensure that the curriculum is relevant for today. Or we are creating infrastructure to prevent and mitigate these issues. Or even as brands that are going into this market, you as a company need to ensure that whatever is necessary to prevent money loss is done by you, right? So you need the right legal framework, you need the right technology, you also need the right marketing. So you need to constantly communicate with your team. Technology breaks, right? I think recently we just experienced Facebook. People couldn't log into Facebook as big and as large as Facebook is. So technology would break. But what is your action as a team? Are you proactive enough to communicate? Are people aware that this is not temporary? So it cuts across everything. But I think that not even just Nigeria, because our population is very young as Africans, we have like a very digital, tech savvy population, right? So you're seeing a lot more of this of Africans preferring digital solutions. So there is already the interest, right? I think when you compare that to the previous generation, the trust has increased, right? We just need to ensure that the solution is also like a reflection of that trust.
Okay, so we can't actually talk about the likes of trust or cybersecurity without mentioning protection laws that a lot of every country obviously carries. If we want to give emphasis to the Nigerian Data Protection Regulation and of course Kenya's Data Protection Act, actually all of these are examples of data protection laws. And these laws, like you said, they play a vital role when it comes to building trust with customers. But let's talk about the effectiveness. Let's talk about the implementation of these laws. How would you actually rate the implementation of these protection laws, especially for giving a reference to Nigerian protection laws compared to other countries?
Yeah, the laws are there. The laws are comprehensive. If you review these laws on paper, it addresses what it should address, right? But when we've had instances of NIN leaks, people having breached through. I work in fintech. We've seen a whole lot of chaos. You have people onboarding with someone else's NIN or someone else's BVN. How do they have access to it? You have situations where you hear that NIN can be bought in certain regions of the country. So identity fraud it's so easy, even regardless of the data privacy stuff. So I wouldn't rate it highly. I think that we have created very robust policies, but we have not implemented them properly. Right. There is really no structure there in the implementation, especially when you work in fintech, you start to see that anybody really can have access to your data. A lot more work needs to be done there. We have to commend their efforts. They've done a lot. But I think that there is still so much work in terms of implementation and tracking, right? We have companies who are accessing data and selling it to other places Sometimes I get emails from the company telling me to buy something. I'm wondering how they got my information. You know, so even us as companies, as brands, we also have like a whole lot of responsibility to play. It is not enough to say, oh, somebody provided their data to you for maybe marketing purposes or play purposes, and then you sell it off to a partner, probably for any reason. It shouldn't happen. But right now, I wouldn't say that there is any implementation in these policies. But yes, the policies are great, but we're not seeing the impact of it.
Well, that's I really want to say it, but it's more like the word when we say Nigeria. Nigeria is happening to us. But I don't really think that this is an issue actually that has to do with just Nigeria. I think there are other African countries who also face these things. A lot of people I get to say we have a lot of laws, but the implementation cannot be compared to the amount of laws and policies that we have in abundance. Okay, away from that, you talked about the importance of education in these areas. And we also know that when it has to do with education and, of course, transparency, that's a key role for most of the fintech companies, not just the government side. The government, the fintech companies, these providers that are out there actually trying to ensure that cross-border transactions are happening. How will you rate some of these payment providers when it comes to providing this too? I'm talking about education and transparency.
Yeah, I would say that um, the fintech has done a lot more in financial education. I stand to be corrected, but like based off what we've seen, the fintech have done a lot more in um, people education compared to like the traditional banks, right? And a good example would be M-Pesa and MoneyPoint. Um, these brands were able to penetrate even the unbanked of the unbanked. They went to the worst rural areas, places where you can't find banks or find bankers. Been able to reach over like 20 million Kenyans, people who earn an average of maybe like $1 per day. This is, below the socioeconomic class. So I would say that a lot of work has gone into it. You have other companies trying to replicate this effort as well. But there's still so much to do, right? And I think that stuff like this broadband and smartphone penetration would also aid, because there's really so much that these companies can do. They don't have a backing for resources. It costs a lot to educate these users. There's also a high risk for this education. Businesses are in business for profit, So if you're spending a lot of money to penetrate into this market, it needs to be viable and it needs to generate also profit. But I think, yeah, we need to also improve our education. And I think I mentioned earlier, our curriculum needs to improve. Right now, students are still learning what I learned, who knows, maybe 30 years ago, but the world has changed. We need to ensure that our students are learning about AI, they're learning about money, they're learning about blockchain, they know how to code, those who want to code, like that the education they get is relevant for the market that we have to do, and even for the market that we have tomorrow. So there is still the responsibility of the government. There is still the responsibility of us as individuals, to also propagate that education. You can use your channel to ensure that as many people as possible are aware of what they need to be aware. I can use my own platform, even if it's on LinkedIn or Google, or even if just my family and friends. I think there is still a lot more to do, but I think that we are in the right direction, really, as a people.
So, lastly, before we get to wrap it up for today, let's look at the future, because we can talk about tech, evolutions, innovations, and we can't focus a little bit about what we can get to see in the next few years to come. So, let's talk about incorporating other evolutions, incorporating other technologies in the fintech industry. I'm talking about the likes of blockchain, I'm talking about the likes of AI, and even machine learning. How can that actually come, or what role do you think that they would play in shaping this future for cross-border payments?
I think they're already today. Honestly, if you think of stuff like machine learning, AI, blockchain, is no longer a conversation of the future. It is not a conversation of today. It's already happening. AI. Right now, we are building solutions where AI can estimate risk, can help with last mile transaction, can also even inform you of a business that you need to transact with, or even inform the solutions that you need to build. AI is helping us to build, to help, to clean our code base, right? So improving the quality of the solutions. AI is also helping with risk mitigating, right? So AI can profile for possible fraud or cybercrime. AI can help you know which users are likely to stay with your brand or leave your brand. So I think that is already happening. Blockchain is very, very interesting, especially when it comes to cross-border payments. The average cost of cross-border payments is about 6% to 11%. Blockchain can make it about 3%, because with blockchain, all of those intermediaries that you have to partner with is gone, so the cost is heavily reduced. Blockchain can also increase the time, or rather reduce the time to settlement, right? So you could go from having to wait maybe 3 to 5 days to get settled to maybe a couple of hours, 3 hours, 4 hours, right? And what that does is it increases access to money. Access to money increases production, it increases growth, it increases expansion. So I think, yeah, blockchain is kind of like a gray area right now because of the perception of cryptocurrency, how fluctuating it is, and a couple of intermediaries not really legal backing. But I think Trump coming in has made a lot of this more easier and exciting. So yeah, I think it's happening now, but this could also be key for tomorrow.
Well, that's all for today's show. Thank you for joining me, Gabriella Michael, as we explore the fascinating world of cross-border payments in Africa. A huge thank you to our guest, Favour Aroghene Ndulu, for sharing her valuable insights and expertise.
Thank you. Have a good day. Thanks for having me.
If you like this conversation, be sure to subscribe to our YouTube channel and follow us on social media. Stay informed, stay innovative, and I'll see you in the next episode.